Welcome to your PLAZM Day 197 Daily Health Check. Today the data is telling a very unusual story, so let's dig right in and find out what's really happening under the hood.
So here's the fascinating puzzle we're looking at today. While the broader crypto market saw this big, significant relief bounce, PLAZM, well, it moved in the complete opposite direction. And these numbers, they tell a really stark story. On a day when a market leader like Ethereum climbed over 8%, PLAZM actually dropped nearly 10%. It's a huge contrast.
I mean, this created an 18 percentage point divergence in a single day. A gap that big, well, it demands an explanation from the data. So let's go find it.
To solve this puzzle, we've got to look at the first and, honestly, the most informative clue of the day, and that's the eSHARE signal.
So here it is, the critical split in the data. While PLAZM itself was on its way down, eSHARE, which is the protocol's staking derivative, it actually tracked Ethereum's recovery, gaining over 10%. Very, very different stories here.
And you know, this split, it signals a really clear cause: discretionary selling. This came from liquid PLAZM holders, not some kind of fundamental breakdown of the protocol itself. When one key part of the system follows the market and the other doesn't, it really points to holder sentiment, not a system failure. Okay, so if the selling wasn't a structural problem, let's run a full diagnostic. Let's pop the hood on the protocol's core engine and confirm that theory.
First up, the vault. It holds a stable 215 ETH, and because of the ETH rally, it actually grew in dollar terms today. So the protocol's collateral backing, it got stronger.
And if we look a little deeper, you can see the yield mechanism itself is perfectly healthy. It's generating a stable 26.65% APR from real DexFi activity, and all the collateral is intact. The engine is just running smoothly. And the whole time, the buy, burn, build, grow engine was just continuing its work, completely indifferent to the day's price action. It generated yield, it applied consistent buying pressure to PLAZM, and it compounded the protocol's treasury. Business as usual. Now here's the counterforce that was at play. Think about this. While some holders were selling, the protocol's own engine was on the other side of that trade, buying and burning nearly 19,000 tokens. This is an automatic daily function that permanently, and I mean permanently, reduces the supply. This chart really puts it all into perspective. Today's selling pressure, it all came from that 53% liquid portion. Meanwhile, thanks to the burn engine, 18% of the total supply is already gone forever. And that number just climbs every single day. All right, next up, let's check the release radar. This is going to help us build our case by ruling out another really common cause for these kinds of price drops. So a super common reason for a sharp price drop is a big scheduled release of tokens hitting the market all at once, creating a sudden wave of supply. So was that it?
Nope. The radar confirms that was not the case today. Conditions are totally clear.
And if we do a forward-looking scan, it shows absolutely no significant supply events on the horizon for over 80 days. This is really critical context, and it strongly reinforces our conclusion that this was all about discretionary selling.
So with all the evidence on the table, what's our final verdict on the protocol's health for day 197?
Well, this scorecard really summarizes our investigation. The core mechanics are green across the board. The vault is healthy, the yield engine is stable, the burn mechanism is active, and the radar is clear. The token price, however, is clearly disconnected from these very strong fundamentals. And that's the key takeaway right there. For participants who are actually earning yield, the system is performing exactly as designed. The daily token price is an external variable, but the yield engine, that runs on the internal math of the vault's APR. And that leaves us with the final question of the day. When a protocol's engine is running this smoothly, but its token price diverges so sharply from the market, what does the data signal? Is it risk or is it opportunity? That is the data point we'll be watching tomorrow.